Stephen Choi. Thank you for joining me. This is Trading with Livevol. This is where I trade my real Reg T account, and I use LVX trading platform, and you guys can see how I use the software to trade. So let's go right to it. This is my account. I had a pretty good run, but I think it's coming to an end here. Most of it is pretty flat, except there's this Facebook trades that I did. Couldn't just lock it in. I had to keep trading, and now it looks like I'm gonna be down here. But I'll kind of cover it a little bit on the earnings report. But I guess I can cover a little bit today too. But let me actually talk about something just in general. I know if you've been listening to my broadcast, it seems like I'm just always bullish, but just wanted to let everyone know most of the time I've actually, in my lifetime, I probably like buying puts more than calls. It's only recently that I've actually even ventured into buying calls. Just when I look at the market in general, you know, this kind of sell-off, and people are talking like if you watch like CNBC, it seems like the end is near, right? And basically like it's barely like really moved, right? Generally, I think the market would be higher on the average, maybe a little bit. If it wasn't for the Ukraine news, but I think in general it right now isn't having that big an effect. I think it will if there is some confrontation, so like if Russia actually goes in or if there's a escalation. But for now, I don't think most of the trading, at least here in the United States, has that much to do with Ukraine. Although I'm sure there are some big funds out there that are unloading some of their position, because if you look at it, it's very near an all-time high, right? So you know, why am I not buying puts now? It's just recently in the past year, just buying puts, it's been kind of very dangerous, right? So it's like every time you buy puts, you basically got whipsawed. So it's been kind of a difficult play. So you know, eventually maybe I will buy some puts, but for now, my consensus, my thinking is that after earnings, I think the market's going to go higher. You know, I could be wrong, but that's just kind of what I'm going by. So let me actually go to some of the stocks that I was watching. So as you guys know, I always look at this thing right here. Let me actually pull it up. This watch list trades, and basically it has all the trades that are 1,000 contracts or more, right? So that's kind of what I'm looking at to trade. And today I didn't find too many stuff. I did find this. As you guys know, I've been bullish on Micron for a while, and I saw the stats tab, and I saw finally there was a spread here where it was kind of bearish, where they're selling the July 2024 call spread, but people are loading up more on these OCC 30-35 call spread, right? And for better price now that Micron is down. So if I can just go to that. You see how there's like 6,000 here and 11,000 here. So some of these guys have been doing the 1x2 instead of the 1x1.5, and they're doing it for better price. So it's I think they're still bullish most of the order flow, except that first order flow, like I indicated, this is the first one that's bearish. If I look at the chart, as you guys know, let me actually go to this one. You know, basically Micron rides this this Bollinger Band up quite a bit. So you know, I had this downtick, but I'm just gonna keep it. I have a 2 lot of calls, and so I decided to just keep that. Another interesting thing is in the emerging market index, there've been pretty hefty put buying. So you can see the puts is 2 to 1 outpacing the calls, and here you see call selling, and a lot of the times it's been this one is actually selling both, looks like, but in general, it looks like they've been buying puts. So you know, I don't know what that means. I've been selling calls, so you know, I've been selling like calls every 2 weeks. I sold some today, and then for the first time, I started selling some puts too. So my thinking is I'll sell puts as it goes down, and then maybe as it goes back up, I'll buy them back. But it's a small position. It's not a big deal. Some other stock that actually I want to point out is this Analog Devices. I'm not familiar with this stock whatsoever. But the part that was interesting was that they're selling Mays and buying the Junes. Looks like for about 55 cents. So you see the 6,000 right here trading, and then you see people buying these, right? So they're paying 55 cents. The thing is, if you just buy this outright, we can do it right now. It's taken a big dive today. Let's open it up. See this, like open a little bit down. They did the trading probably around here, and it's still going down. So, you know, for those of you guys who trade ADI, this might be something interesting. I don't personally know that much about ADI, so I'll probably skip it, right? Okay, so just to review some of my positions. So Bank of America, as you guys know, I have this call spread that expires in January. I paid pretty much 97 cents, and I'm hoping to make $1.03 on it. So I'm gonna keep that. DLLR. Basically, I have all these time spreads on. Once these expire, we'll see what happens to these. But you know, it's a long shot, but I'm just keeping it for now. You know, maybe I can sell these Junes if these expire for like a dime or 15 cents 40 times, and that will make up for the cost of buying this time spread, right? So that's DLLR. EXC. So this is a company where I saw this big put spread go up, right? Selling the Mays, buying the Julys. Looks like, you know, the Mays has a decent chance of just expiring worthless. I think I paid 44 cents, so you know, right now I think it's just pretty much a push, right? The other one is Facebook. Yeah, so basically I sold that strangle, I made money, and then I decided to get bullish on it, which, you know, as you can see right here, was a mistake. But for today, I think in the long run, I like, even for these Mays, I like my position here. I bought these 57.5 puts just to kind of cap it. Now, what I am kind of realizing trading out of the Reg T versus how I was trading before, and Apple was a really good example. Usually, you know, if I change my mind, then yeah, I just close it out. So basically in Zynga, even though I'm still kind of bullish, I'm less bullish now just because of the kind of the sentiment in the marketplace. And Zynga's fundamentals aren't that great, so I might as well like pick the best of breed. So Apple, I would still remain bullish, and I would have kept on loading up on Apple. And then yesterday, as it went up like 40 bucks, I would have made a killing, right? But even though I had a decent return yesterday in Apple, you know, like 4,000 bucks or 3,500, nowhere near is it what I would have made. Basically, if I was trading on the floor, I would have probably easily made like over 100 grand on a move like that. So I think what I am learning is I don't actually have the bullets to just keep on loading and firing, right? So when you have millions of dollars, you can just kind of like keep loading up until you hit. But you know, like with my account right now, you can't load it up, and you can't really sell premium to actually pay for all those bullets that you're using. So I'm using like slightly different strategy. I think what I have to do is maybe I think initially getting into position is good, but once I make, maybe I should try to get out right away. You know, I see that I made some mistakes in like some stocks where I kind of kept on the position and it didn't really work out, even though at the initial, you know, initially when I put that on with the assumption, it worked out and I made money. So I should have like just, I think what I'm gonna have to do is like have a tighter control and basically get out faster once I make the money. Just because the Reg T doesn't really allow me to build a position and keep on going. That, after saying that, I still like this position, right? So I'm short this put spread. I am long 4/8 on this 1/2, and then I'm long this time spread. The only real mistake I think is I had a chance to sell these for $1.80 2 times, but I didn't do it. So that $260 out of the what I'm losing, I think that could have been something I could have avoided, as well as maybe this part right here selling this put. But in the end, I think it's going to bounce back. And long term, I'm pretty bullish on it, so not a big deal, right? What I'm talking about before was like this kind of stuff, like Hertz. So originally when I put it on, these were trading like, you know, 230, and I made about 30-40 cents. But instead of, you know, just getting out, I stayed long just because, you know, it was a one lot. And normally maybe I'll get out of half. But the other thing is I was kind of bullish on it, right? So in the end, you know, I don't know if it's going to work out. I'm just keeping it because I'm still bullish. But in the end, I think maybe I might have to do some adjustments, right? Right. So I was kind of thinking I was going to ride it up. It didn't happen. So we'll, you know, it could kind of go down here, and then I'll lose a lot of it. So I think in the end, I'm just going to have to readjust maybe the way I trade and make money. So IGT, same thing. Basically, well, not the same. This was an earnings play, didn't work out. So this one I can see losing. At least the good thing is in HA, I sold out of those 14 puts. I mean, I bought them back for 15 cents, right? So today they're 20.35, but I closed them out for 15 yesterday. So I'm thinking maybe that's more of what I have to do. The other one is IWC. So remember this, like 3,500. The guy originally bought the 77, the April 77 calls, made a lot of money. He closed that position, rolled into May 72, and I basically piggybacked it. And you know, just because this is IWC, so I guess it's a micro cap of the Russell 2000. So it's like the Russell of the Russell, right? So it's like the smallest of the smallest stocks, and most likely they'll just get a pounding first. And you can see they're down 2%, and if you look at SPX, they're down less than 1%, right? So I had that. Philip Morris and Newmont, I had this very small position, put spreads, but it's not working out there. They actually are all going up. So I bought 5 of these. Actually, where is that anyway? And yeah, so it's up there. And which one did I buy? I think I bought the 37.5. Right. So, you know, most likely this isn't gonna pan out. So let me actually try to sell these. Let me sell 5. So I'll try to sell for 13 cents. See what happens if I get filled. Newmont also, it didn't work out. I had like a 2-lot put spread, I think. Yeah. So it's up. So maybe I'll sell this too. Complex. I'll sell this and buy this 2 times. And I'll do it for 19. So I don't know if I'm going to get filled, but I'll see. And then obviously I talked to you guys about Micron and then XLE. So somebody did this spread, right, where they bought the May 17 puts and sold the April 25. So these expired today. I'm going to have these. And looks like maybe it's the first sign of maybe rolling over. But it can easily bounce back up. I'll see. But I'm going to keep these now that I did the spread and see, just hold it naked, see how it is. So I basically paid 72 cents for the spread, but this thing decayed faster. So I'll, I guess one of the things I can do is maybe sell these, right? And I think I talked to you guys about it before. Maybe sell these for 40 cents. And then I would have bought these, the May 17th, for basically 30, right? And then as I sell another week, I basically get these for free. But in the end, like, not sure if I want to do that. Let me look at this one. Yeah, so there's heavy put buying here. Yeah, so it's like, May 91 puts, they're buying a lot of puts. Kind of like, and I have these already, right? The May 92 puts. So we'll see what happens here. So this looks like it's kind of indicating that maybe the either it's going to go down for a short bit, or or at least like consolidate. Whatever the case, dropping like another $1.20 is not that big of a deal, and it most likely could happen. It might drop down to like this, like 89 or 90 range, and then that's probably where I should get out. So that's about it for you guys. I'm gonna be out of town next week. Starting on Wednesday, I won't be here. I'll be at the OIC conference in Austin, and I'm trying to figure out if I can do some blogs from over there. But definitely on Wednesday, somebody else will have to do the blog, video blog. So I'm going to see if somebody can kind of fill in for me. But other than that, I hope your trading goes well, and talk to you guys tomorrow, or Monday. Actually, Monday. I won't be doing this on Saturday. So take care.